Good morning, everyone. Today I have the pleasure of speaking to Shawn, who is the CEO of CGX. How you doing, Shawn?
I'm good, thank you, Ed. How are you?
Amazing. I met Shawn at my last event, who had this incredible idea of opening a platform for Amazon sellers that allows sellers to sell shares of their existing inventory to lower their risk. Did I say it right?
Yeah, that's a good way to put it to start off.
Okay, so how did you get this idea? And then we'll do a quick demo. And you're going to be at the next event, so you could speak to people then. But how did this idea come about?
Over the last 10 years, being in the industry on an executive level with several different companies within the e-commerce ecosystem, we noticed a pain point for sellers, which was cash flow. Now, what we saw was the emergence of lending companies being able to lend on receivables for these e-commerce businesses to help them bring more cash in at a timely fashion to be able to scale their business. But what that did was create more debt, create more higher interest payments, monthly payments that just kind of strapped the business even further. I took my knowledge of commodities trading on Wall Street with various different futures exchanges, along with my knowledge of the e-commerce business, and I merged the two. I saw the pain, and I wanted to solve that pain, making sure that sellers could have liquidity for all that inventory that they've got tied up sitting in warehouses like Amazon, right? Without having to pay such high interest rates or guaranteed monthly payments. Because everybody knows debt just straps you even further when you have to make those monthly payments with or without the sales velocity. And so what I did was over the last 7, 8 years, we put together a platform which is called CGX, Consumer Goods Exchange. We allow sellers to get onto the exchange, integrate their marketplaces, and sell the future sales of their existing inventory in real time to traders across the globe. Okay, and what that really means is basically you've got traders, you've got investors, just like they would get onto Robinhood or TD Ameritrade to buy stocks in Amazon or buy stocks in other companies. Instead, they're buying stocks, shares into your existing product line. Now, give you an example, you have about 1,000 pieces of a certain product. You can basically sell off the future sales in real time, get the cash up front, and the trader is then waiting for that product to get sold and to get paid back for that product. Now, you would obviously offer a slight discount on that product, and the trader, that's where he or she would make their profit. But you would get that cash up front in real time instead of waiting months to not only sell the product before the marketplace to actually pay you out on that. Make sense?
Yeah, so I mean, it obviously works for now just on FBA because you can tap in and you can see that it's actually there. We spoke about how that's done, but first we're going to talk about what it is, and that's the point of today's conversation. So you want to share the screen and show me how what you've done?
Definitely. So very simply, and I'm going to try to put it very simple here. The reason we started with Amazon FBA because it's the behemoth, right? It's the largest marketplace out there. The ultimate goal, though, is to add as many marketplaces in the future as possible to create more liquidity onto the platform. A seller who's currently selling on a platform such as Amazon FBA has a lot of inventory sitting within a warehouse, let's say in the United States, various different warehouses. And for instance, here I'm showing you the platform. It's a demo side of the platform where a seller has inventory in their Amazon fulfillment centers. They can do one of two things. They can create an individual offer or a bundled offer. When they look at their inventory, they'll see all their sales stats. They'll see how many they're selling per day, per week, per month. They'll be able to basically get an idea of exactly how much inventory they have, how much they're getting paid from that inventory from each sale, and how often they sell that product. Once they see that, they can create an offer and say, okay, we've got this product here, and we want to put out an offer that says we'll put out, for every, for 100, this one is a demo, so there's not really 1,000 pieces in there, but let's just say, you want to put 100 pieces out there. Sorry, you want to put 100 pieces out there, and you want to start the price at $1 because you receive about $1.04 for every sale. And then you'll put your rules in there and say anybody who takes 50 or more, I'll give it to them at 90 cents. Anybody who takes 100 or more, I'll give it to them at 75 cents, right? These are just made up numbers. I just make them simple and I create my offer out there. Once I do that, the investor will come in onto the platform and they'll see all the products out there on the exchange and they'll see the stats for that product. Now, the great thing about this is they won't see who the seller is. It's fully anonymous, just like the stock exchange, just like the commodities exchange. So therefore, you're not giving up your business. You're not giving up rights to your business. You're not letting anybody control your business. It's not like drop shipping. You're not wholesaling this out where you're going to sell this product to somebody and then they're going to come and compete against you on these marketplaces. In this particular case, an investor comes in, for instance, sees this router right here, this TP-Link Wi-Fi router. They see how many being sold a day, which is 15, 109 a week, 459 a month. They see it's being sold for 60 bucks. Amazon's charging them $11 in fees. So for every sale, the trader sees that they're receiving about $48.98 per sale. The trader can do one of two things. They can go in there and bid price and quantity. So they could take up to 5, they could take 10, they could take all of them. They could bid their price based on the research that they've done on this data. And if they get accepted, let's say they got accepted on 100 pieces, okay, and they got accepted for, let's just say $48. Well, let's not even play with the price. Let's just say $48. That's $4,800 minus CGX fees that will immediately go to you as the seller, okay? You've now taken that $4,800, which is could be 30 days, could be up to 90 days worth of sales you can sell out in the future. Okay. You take that cash up front and now you continue on doing your business, scale your business, find more SKUs, increase your product line, do what you need to do to expand your business with that capital. Okay. The trader, on the other hand, is now going to wait for the next 100 sales to occur in real time. Every time one occurs, that trader will see the gain that they've been paid back. Now, obviously, there could be some price fluctuation. There could be, a price increase, price decrease. There could be slowdown in sales. There could be an increase in sales. That's the risk that the trader is taking. But there are some rules in place to make sure there are no foul plays, or that we can go into that later, Ed. But we make sure that both sides are protected in some sense. Okay, but ultimately, you get the cash up front, and now the trader just waits. As the next 100 pieces sell, the trader will make their money. It could be 2%, could be 1%, could be whatever discount you set and got accepted on from that bid. Okay, so really you're in control of your business. You get the cash up front and you sit and wait. And let's just go, without going into more details on the platform, let me explain a couple of things though, Ed. A lot of sellers have told me, well, we don't need the cash, and if we do, we have a bank, and they're giving us good rates. The difference is here, there's no interest rate, there's no monthly payment, and there's no guaranteed repayment terms. What that means is if you sell 100 pieces of this TP-Link router, if you sell 100 shares into the future sales, you only pay back the investor when the TP-Link router is being sold, and you're paid for it. So if you end up selling these Crocs next month, 100 of them, you don't need to take cash from the Crocs to pay back the investment that came in on the TP-Link. And that is the difference between trading on the exchange and creating liquidity for yourself versus taking loans and having debt repayment terms and high interest rates. Okay. And to me, that right there stands way far beyond any type of lending you could take in. Because now you as a seller can generate cash immediately instead of waiting months at a time to sell that level of inventory and get paid by the marketplace every couple of weeks as a paycheck. All right. You now have that cash up front, expand your business. And this is where I'm going to go into at the last piece of it on why we created it, right? This is not like 10 years ago, Ed. And as you know, the competition today in e-commerce is what retail competition was like in the 90s and early 2000s. There was a pizza shop on every corner. There was a candy store on every corner. And you were just hoping to get the walk-in traffic that's going down Broadway or going down Ocean Parkway, right? Anywhere, just making sure that you could get as many people walking in. Today, you're doing marketing campaigns. You have 20 sellers against the same SKU. And all you need to do now is focus on how you can bring more SKUs, more products within your business to keep afloat, right? This is going to allow you to do that. You don't need to take loans. You don't have high interest rates. Bring the cash in, find more products, become a strong seller on the exchange so that more and more investors are happy to put money behind you. As they put more money behind you, You create liquidity, you increase your business, you may give up a small profit, but have multiples of cash coming in now versus what you would have when you sell one by one a day on these marketplaces. And so
Right,
now
and from the
your goal
traders,
is
right, I
to
get that. So the seller's going to get the money up front and hopefully at a profit. And from the trader's perspective, it gives them a chance to get into the e-commerce game without any knowledge.
Yeah, because one thing I notice, and I'm going to tell you on a personal standpoint, passive income is very hard to come by, and a lot of people today, no matter how old you are, no matter what you do as a living, you're looking for passive income streams, right? And traders out there, people, investors out there, they try to get into various different aspects of asset classes. They got real estate, crypto, stocks. That's why Robinhood took out, but it's not really passive income, right? I can tell you right now from firsthand, real estate is not passive. Stocks
Mhm.
are not passive. These are asset growths. But the real passive income they thought would be, oh, drop shipping, right? Come on, drop shipping.
Right.
What did drop shipping do? Drop shipping created a larger scale of competition for the existing sellers. Okay, now you've got China, you've got other countries coming in, pushing product that they don't even own, and it's going against all your current sales, all the money that you put up to create a marketing campaign around and have that inventory sitting in warehouses. Now you've got all this competition, right? This removes competition in that sense because you're not liquidating your market share here. You're continuing to do business. You're not giving the product up to anybody else, whether you're authorized or not authorized. You're not allowing others to sell against you. You don't have interest rates. You don't have monthly payments. Bring the cash in, expand your business, and allow other people to make a little bit of money in real time while they continue to invest behind you because you become a strong seller on CGX.
What happens if there are like long-term inventory storage fees, or if an item gets taken down? What happens then?
So we've got several rules in place. And the first thing to mitigate some of the risk is we're not allowing any seller at the moment to sell more than 90 days out of their future sales. Okay. So that's the first thing we've done to mitigate some of that risk. Second thing is at the time of execution of the trade, the traders will see a 2 week high low price on that product. And we do not allow the seller to drop the price below a 1% margin of that high
Hmm.
low price. The third thing is we also do not allow the seller to drop the PPC spend below 1% of what that 2 week high low was at the time of the trade. This gives them some room to continue doing business the way they do, but obviously avoids some of that foul play and risk of pumping and dumping on products. Now, then you have your one off situations where Amazon could pull you off the shelf, or a marketplace could pull you off the shelf, or a brand could pull you off the shelf. You, as a seller, then have 1 week to pay back the remaining balance on that particular outstanding trade at the highest price that you had currently paid back that investor. So if
Hmm.
you had paid back the investor $14 per piece and you've got 20 pieces remaining, and then all of a sudden you don't have that inventory available to sell because they pulled you off the shelf, well, that's not market risk, that's business risk, and business risk has to be mitigated. Market risk, that's what the trader is taking on, right? High, low, price going up, down, sales going up, down. That's their risk to be able to make some profits, just like in the stock exchange. But business risk, which means that you can't even sell the inventory anymore, you now have an obligation to pay back that investor, make whole of the remaining pieces on that trade, and you'll still have a good standing on the exchange. You won't be negatively affected by that because obviously that's against your control when something like that happens as a seller. And the trader will continue moving forward. They'll receive their cash back, and you'll just do more trades moving forward. Now, another thing that I want you to understand is returns, which is a major part of a business in the e-commerce sense. If during the trade, a investor invests in 100 pieces, and on the next payout, before the next payout, some of those goods are returned, the investor will take the hit of that return and they'll have to make up for it. They'll go back into, how many more sales they'll need to complete. So if 3 returns happen, that 3 will go back into how many sales are remaining for that investor to get paid back. But if the investor's already been paid back for that sale and then a return happens after the payback, the seller will then have to recoup that product
Hmm.
back from this, because they're receiving the inventory back and likely trying to resell that item. The seller would take that hit. So as long as the payment has not been settled, which let's say for a marketplace like Amazon happens every 2 weeks, then the investor will take the hit on the return. But if it's past the 2 weeks and it's been settled already, then the seller will have to take that hit, hopefully get that product back and sell it back into the marketplace.
It's fascinating this, and there's a lot of situations. I mean, the thing which comes at me the most is, let's say, someone selling masks on COVID, let's say. So they could buy it up front and then the price will go up. You basically have to anticipate that the price is going to go up as a trader.
Well, it's not just the price, right? Like we're not trading price here. What we really want to do here is allow you to create a passive income stream by trading the velocity of sales. So another thing is, Ed, if you just bought a product today and you have no sales history, we can't allow that product to make an offer on the exchange,
Hmm.
right? You can only create offers on the exchange as a seller is if you have 6 months of sales history on that product. For now, that's our cutoff. 6 months. You must have 6 months sales. Why? Because we don't want products on the platform that investors can't make money off of or don't know if they're going to make money off of. You need to prove that you've replenished that item, you've sold that item, it's not counterfeit, there's a demand for it in order for an investor to come in on the other end and buy the rights to the future sales. Now, that doesn't mean you have to put fast moving products in here. You could put slow moving products, fast moving products. That's up to the investor to make an educated decision based on the data on what they want to pay and how many they want to buy. Another good piece that I didn't show you here, but just to get into it, is for larger trades, sellers that don't want to do one-off trades, because an individual trade is basically a trader coming in on the other end, and they can bid price and quantity. They could take one piece, they could take 50, they could take 100 and bid the price. But we've also got a way to create a bundle trade where you could link multiple products in your inventory, create one bundled offer, okay? And then what that means is ultimately that bundle includes multiple products of multiple SKU of multiple inventory levels, and the investor can come in on the other end and bid against the whole bundle. Okay, they can't break the bundle. So if you want to create a $50,000 bundle of all tech supplies like Apple MacBooks and TP-Link routers and whatever, you can name it Tech Bundle as you see here. Ask for whatever amount, in this particular case, $3,250 for the whole bundle. You'll look at aggregated stats against all the SKUs. You can look at the individual stats, and even going further, which will introduce starting January, is we'll give you premium data access, which will give you competition stats and pricing history that goes far beyond 6 months. I mean, we're gonna give you a bunch of data and indicators to allow traders to make that decision. Once they bid on this bundle, they now own the whole bundle. So if you want to liquidate 50 grand worth of stuff and you want to make some inventory that includes fast moving items and slow moving items together just to make it lucrative for the investor, but you also want to offload some risk as a seller, you can do that. And that's for the larger traders, right? That's for the traders who want to come in and do $20,000, $30,000 trades, not $100 or $500 or $1,000 trades. And so sellers have the opportunity to liquidate a lot, a little. They want to just test the market. They can basically set their price ranges on, if I'm selling items up to that are going to complete within 7 days, this price are better. Within 30 days, this price are better. Within 60 days, if somebody's buying, this much items, this price are better. And that's it. Let the offers sit out there. Let the investors come in and just start giving you money. And the great part about it, that it's just like going IPO. It's like IBM or Amazon going on the stock exchange. You as a seller are going public on the exchange. You're not obviously disclosing who you are, but you now have the world that can back you with some cash for a little bit of the future sales that you're currently already doing, and you can make multiples of that cash. And for any seller who sits there and tells you, well, we don't have cash flow problems. Well, if you don't have cash flow problems, that's the problem. Because that means you're sitting on cash in a bank, you're waiting to just replenish the few SKUs that you've been selling for the last year. You're in a downward spiral in this business. You're just waiting to get pulled off the marketplace. You're just waiting for more competition to come sell against you. And all you're doing is hoping that little cash you have sitting in there, you're going to use it again in 30 days to replenish the same product again. What you need to be doing now over the next few years is focused on cash flow and not just profits. That's not the game anymore. If you want to stick in this business, you need to bring as much cash back into the business, find more SKUs. When you, as the owner of that business, come to work, you don't need to be looking at your marketplaces like Amazon and Shopify and your website sales. You let your staff do that. What you do is you get onto the exchange and you find out how you can liquidate and create as much cash as possible to buy more product. Do what you need to do. If you need to buy retail space, if you need to buy product, if you want to increase your product lines, if you want to get out of cosmetics and get into electronics and toys because the season's coming up, you can do that now. You can go ahead and test the markets. But even further, and I'm going to end this here, what I learned myself, which I was surprised because I didn't look at it this way, sellers investing in other sellers, Ed. I've had sellers on the platform that are selling electronics, and then they see other sellers selling, like I said, toys, which are something very particular because you have to have rights to the brands, etc. They're like, well, listen, I don't have access to these toys. I want to invest in so and so because they have access to these toys and they make money and the season's coming. You could look at it in so many different ways, like you said, seasonal trades, calendar trade,
Right.
so many different ways that sellers can make money. The seller recoups some cash off the exchange by selling futures on their product. They have the cash available in their platform. They can use that cash and trade into other sellers and make more money. They can hedge.
Right.
So there's so
Right.
many ways to allow these businesses to now make capital. I just want everyone to understand that we're not a lending company. This is not loans. This is a new way that you must do business as an e-commerce, seller over the next few years if you really want to take your business into that next stage and not look at this as a downward spiral, which is what I'm seeing in the e-commerce space right now.
Right.
Everyone's just trying to hold on right now.
Yeah. Thank you so much, Sean, for coming up. This is definitely a new idea and definitely congratulations for putting this together. I know there's a lot of nuance and angles, so I'm looking forward to seeing you at the event. And we're going to allow sellers to sign up. So we're going to have a link below and lots of luck. And
Yeah, and
looking forward.
I really appreciate all the time you've given me, and I just want to say this to your followers. Right now we're onboarding Amazon FBA sellers. That's literally all we're focused on today is to fill up the platform with product. So any of your followers that are watching this that come on through ASGTG's channels, we are providing 1 month of free trades. Okay, so any sellers that come on, they can continue to create offers, they can execute offers and trades on their own behalf as investors, and we will charge them zero fees.
Okay. Thank you so much. I appreciate you coming on. Thank you.
Thank you very much.